You're listening to the Patenting for Inventors podcast with registered patent attorney, Dr. Adam Diamond, founder of Diamond Patent Law, the #1 source for securing your intellectual property needs. Now, here's your host, Adam Diamond.
Hello and welcome to the Patenting for Inventors podcast. My name is Adam Diamond, a registered patent attorney and founder and owner of Diamond Patent Law in Los Angeles, California. I can be contacted through my website at diamondpatentlaw.com. That's DIAMENT, patentlaw.com, or call me at 424-281-0162. This is bonus episode 5, where I interview the founder of ACAP Advisors and Accounting, Aras Oghoorian. This episode is especially useful for you inventors that have questions about what kind of business entity you should form to turn your invention into a business. Hope you enjoy. I have here Aras Oghoorian. Aras is a certified financial planner and a certified public accountant. He started a group called ACAP Advisors and Accountants. It's a boutique wealth management and full-service accounting firm. And one of the aspects about wealth management is minimizing taxes. And I brought him on here for this guest interview because a lot of my clients have an invention and they want to start making money, but they haven't formed any kind of business and haven't thought much about the business aspects of the invention. And what kind of business you form could affect how much you pay in taxes. So he's going to talk about the various different types of business entities you should consider. We're also going to be talking about other things you should think about when you form a business, such as separate bank accounts and salaries and permits and other things. So Aras, welcome to the show. And why don't you start out by just giving me a brief introduction about who you are and how you got to be where you are professionally now.
Sure. Thank you, Adam, for having me. It's a pleasure to be here. As you mentioned earlier, I am a certified financial planner, and I'm also a CPA. Our firm is a dual-purpose firm in that we not only do wealth management for individuals and for companies, but we also are a full-service CPA firm. So on the CPA side, we do taxes, obviously, for individuals, corporations, and partnerships. But we also do the accounting, the bookkeeping, and the business advisory, which is really in line with what the subject matter of today is, which is entity formation, which is very, very important for someone who is just starting to start out a small business.
And can you tell me, when I was reading up on your bio a little bit, and we've known each other for a couple of years, you seem to have a very impressive background about all the things that you've done. Can you just tell us a little bit about that stuff?
Yeah. So I started off my career really, really early. I've always known what I wanted to do, so there was never any vacillation with, career choices. When I was in college, I started working at the Federal Reserve Bank of San Francisco, and it was a great experience. I was a junior in college, and I started that position, which is very unlikely for someone to start off in their career that early on. And I loved it. I worked in bank supervision. I was in foreign banking at that time, and I worked at the Fed even after graduation for about 10 years. Really, really enjoyed my time at the Fed. Then from there, I was getting ready to go to business school, and I was admitted, and I paid my deposit and ready to go. And all of a sudden, I got this great opportunity to go work in Eastern Europe with the U.S. Treasury as a U.S. diplomat in Eastern Europe. So I jumped on that opportunity after much consideration. I did that for a couple of years. I was an advisor to several countries in Eastern Europe, including Armenia, Georgia, Latvia, Lithuania, and I also did some work in North Africa. So after that tour of public service, in a sense, I came back to the U.S., worked in a wealth management and a tax firm, very similar structure to what we do now in the Washington, D.C. area. Did that for a couple of years. And I moved there because my wife is from there. So the goal was for us to live and settle down in Washington, D.C. area. But being from LA, which I know you're from LA as well, it's really hard to take someone from LA and put them anywhere else in the world, because LA is just the best place on earth, in my opinion. So I really missed it here. My wife recognized it, and she's like, let's just move to LA. I know you like it there. I know you miss it. And I moved back to LA in 2009, which is when I started my practice. So
right.
That was too long-winded.
All right. No, it's a great background. So what happens lots of times is a client will come to me about their invention, and they ask me what kind of entity they should form. And usually the lawyerly answer is always, it depends. But that's not the answer I give them. The answer I tell them is, I don't know. It's been over 10 years since I took a business entity corporations class in law school. Even when I formed my own practice, I had someone else do it for me. I know what my strengths are, I know what my weaknesses are, which is why I'm having these guest interviews on, because you really want a team of people to help you out with your invention. I just do one part of that. So why don't we just kind of start with the various kinds of business entities. If someone, let's say they have an invention, they're just kind of by themselves right now, what are the entities they should be thinking of and the kind of considerations that they should think about?
So that's a great question. And I always tell them the same thing. I said it depends, because I always end up asking a lot of questions on what they're trying to do, what their objective is, what their investor, like they're planning on bringing in various investors. So the different types of entity structures that are available is an LLC, a corporation, which can be either a C corporation or an S corporation, which I can describe. And then to get even more granular, you can have an LLC that is either a partnership or an LLC that's taxed as a C corporation or an LLC that's taxed as an S corporation.
All right, so
single member LLC as well.
All right, so lots of different letters there. Kind of just go through maybe the advantages and disadvantages tax-wise or otherwise, when some parts have more legal aspects about like who's liable, and other things have to do more with how you're taxed. So maybe just kind of go through a couple of those entities and how they work.
Yeah, absolutely. So the LLC is probably the most easiest entity to form and to maintain, and all these entities are state specific. So you would have to create the entity within your state of residence or where you want your entity to operate from, with some minor nuances, which I think you can elaborate on. So the LLC is the simplest one to set up. If you are a sole proprietor, if you're a single person working in your basement, you got an idea, an LLC is very easy to set up because all you have to do is submit an articles of organization with the state that you're in. In most cases don't need an operating agreement, which we can go into later on. You can have what's called a single member LLC because you're the only owner of that, and it makes your tax reporting super simple. You still have that corporate shield that a lot of people want for that liability protection, but the running of the entity is very, very simple, and the taxation of it is very simple. Sorry, go ahead.
Oh, no. So, what is basically kind of the first advantage? Why, if someone just said, hey, like I just formed this, I just came up with this invention, I'm going to start selling it and make money from it. I'm just going to report it on income that I make. What's wrong with that?
There's absolutely nothing wrong with that. So what you're describing is called a sole proprietorship, and you can have that. It also gets reported on your personal tax return under what's called a Schedule C. So when you have that, you would report it exact same way that you would a single member LLC. The only difference is, or there's a few differences. One is you don't have that liability protection, which a lot of people are thinking about, especially if you're in a type of business that's very litigious. So you want to make sure you have that liability protection. The other is it doesn't have that professional feel to it. So if you're operating under a sole proprietorship, most people use like their social security number for the W-9s they submit to their vendors. They have their name as a name of the company. And if you want that professional feel to it, especially if you're trying to present the image that you're a larger entity than you are, then it's always more professional to have that LLC name attached to it.
So if someone's deciding between, because there's incorporated, there's LLC, and then there's, you see INC or incorporated, and there are lots of different kinds of corporations. At what stage, or if someone's deciding between the two, what are kind of the factors they want to think of about, how they decide?
Yeah. So what I thought I'd do is give some examples, if that's okay. And
yeah.
Use like real life examples. So let's assume that you and I want to get into business together, and I own some raw land that I've had for many years. It's all paid off. And you are a contractor, and you're like, hey, Ara, let's get together. I'm a contractor. I can build this great, apartment building, and we can be 50-50 partners. I donate. We set up an LLC together. I put in the land as a contribution. You put in your sweat equity, but we decide we're going to split everything 50-50. With an LLC, we can do that because we can create an operating agreement that says, even though I only put in an asset, which is a land, and I didn't put any additional capital and you didn't put in any actual dollar amounts, but you put in your sweat equity, we can still split the profits 50-50. That's the benefit of the LLC, because we can do that with the operating agreement. We can't do that with a corporation. So if someone came to me and they wanted to structure something like that, and they said they want to do a corporation, it's not possible with a corporation, because with a corporation, it's the number of shares that you own that you have to buy into that dictates what your ownership percentage is going to be. And you're not able to divide the percentages like the way I just described.
Yeah, so I could see maybe if inventors have, or you're trying to form a company and one person is providing one part of the business, another person has the patent, that they're providing kind of different things. So it's not just all money that, that LLC would be useful for that type of thing.
Yeah, I mean, actually, that's a great example. Let's assume that you came up with a great patent, and I'm great at marketing, and we want to be able to take this, this product to market. We would develop the LLC, have an operating agreement where we share profits 50-50 or whatever allocation we want. We can do that with the LLC because it's extremely flexible for us to be able to do that. But with a corporation, it's not possible to do that.
So would you say the corporation, at what stage would someone kind of think that a corporation might be better for them than an LLC?
So I want to clarify that when I'm talking about the corporation right now, I'm only referring to the SCorp, and I can describe the differences later on. So the instance where a corporation, an S corporation, would be more beneficial than a LLC is when your revenues are a lot. So, and I'd say maybe 300,000 or more. And the reason why that is because the way that corporations tax, an S corporation, is different than the way the LLC is taxed. And let's assume that you have revenues of $500,000 in your LLC, and you have no expenses. That $500,000 flows into your personal tax return, and you have to pay income tax on it, and you have to pay payroll tax on it. Okay, so those are the two taxes you have to pay with that $500,000 of pass through that comes to your personal return. If that was a corporation, an S corporation, a pass through, then what happens is you have to take a reasonable salary within your corporation, and let's assume you pay yourself $100,000 reasonable salary. That $100,000 you have to pay payroll tax, and you have to pay income tax on. But the remaining $400,000 you only pay income tax on. You don't pay payroll tax. So that's one of the benefits of the S Corp, is that at higher levels, you're minimizing the amount of payroll tax that you have to pay. And that is a huge tax benefit.
Okay. And I know that there are different kinds. You mentioned S Corp, but there's also something called a C Corp. What are the difference between those?
Right. So this goes back to, asking your client, what is it that you're trying to do? And if they ask you what's better, a C Corp or an S Corp, you tell them it depends. If they're trying to, an S Corp is limited on how many number of shareholders you can have. You can have 100 shareholders. There's limitations on what type of shareholders they can be. They cannot be foreign shareholders. You can only have one class of stock with an S corporation, and it's a pass-through entity, meaning the S corporation itself does not pay federal tax. Whatever the net profit of that corporation is passes through to your personal taxes, and you pay the tax on that corporation, on that net profits of the corporation. All the shareholders do. The C corporation is the most widely known type of corporation. They're the companies like the Googles, the Apples, and most multinational corporations, because you can have millions and millions of shareholders. There's no limitation on it. You can have many, many different types of share classes. So, for example, Google has, I think, 3 or 4 different share classes where the founders, every share they have, they get 10 votes, and everybody else gets 1 vote for every share they have. You can do that in a C Corp. You can't do that in an S Corp. The drawback to the C Corp is that it's double taxed. So the corporation earns a profit. They pay tax on it. Currently, it's a flat rate of 21% because of the Tax Jobs Act. But then when that money is distributed to the shareholders, then they pay a tax on it as well. So it's a double tax situation with a C Corp.
So it seems like, in general, a company, let's say, or an inventor that is small, it kind of wants to stay small. They don't really have like big ambitions of becoming, the next global company. More likely than not, if they do a it would be an S Corp. They would do like an LLC or an S Corp typically.
It would be, and it also depends, again, the word depends on the industry that you're in. So, for example, in California, which is where we operate, if you are a physician, you cannot be an LLC. You have to, if you're operating if you're providing medical services, you have to be a corporation. So most physicians in California operate as an SCorp. But if you are, selling stamps or doing, some other type of business that doesn't require you by the state law to become a corporation, then the LLC is probably the best choice because it's a very simple structure to set up. It's very easy to maintain as well.
Okay. And I do see these other letters sometimes of like LP and LLP. Are those things to even consider or know about for kind of the startup, or is it not really relevant?
Not really relevant. We don't do much LPs or LLPs. They tend to be more the larger law firms. I think they're legacy type of entity structures. The problem with the LPs and LLPs, you have to have, I think, a general partner that's in there that's going to have that liability associated with it. Now, that general partner could also be an LLC or another limited partnership, but we don't get involved in those. For most entrepreneurs, startup companies, they tend to mostly focus on the LLCs, SCorps, and in some situations, a CCorp.
Okay. And let's say you've set one up and then you realize, or someone comes to you and say, this is what I have. And you say like, no, you made a mistake. What you really want is this. Is this a big deal to switch, or how's it done, or the implications?
This happens all the time, which is why we tell people, make sure you get a professional that does it for you, because they're going to do it right. And when I say it happens all the time, I mean, every month we'll get 3 or 4 people that we have to fix these for. So someone will come to you and say, I set up a corporation and now I'm operating through my corporation. And then they say, I'm a CCorp, I'm a SCorp. And then we realize when we file the taxes that they're not a SCorp, they're actually a CCorp. So they never filed their SCorp election, or they never got an EIN, an employer identification number, or all they did was just go on Legalzoom and they just, filed the articles of incorporation. That was the end of it. They didn't do all the other 10 steps or 7 steps that are associated with filing an entity.
Yeah, I heard speaking of Legalzoom, because a lot of people would like to use them instead of attorneys, and of course attorneys are against it. Partly, financially, it takes away business. That's an obvious one. But I've heard an explanation that Legalzoom is kind of like a vending machine. Like you put in something, you put in your coin, say this is what it is, and it just spits it out. And sometimes it works for simple things. I'm not going to say it's never useful for people, but if you just want to be a little bit more careful, you just might want to actually talk to an actual person that can review things and give you some more personal advice about what your goals are. So let's kind of move on to other things besides the corporations. And you started this business. Let's say you're either a sole proprietor by yourself or one of these types of legal entities. What are some other considerations you need to think about kind of when you're starting up?
So let's assume you've got that entity structure all set up and it's ready to go. A few tips we tell people is make sure you don't commingle assets. What we mean by that is have a separate bank account, separate credit card for your entity. Even if you're a sole proprietor, it's a good idea to keep separate books because especially if you are a LLC or a corporation, and if you don't keep separate books, and I don't want to give legal advice, this is where your arena comes in. I've heard that if you don't keep good corporate records, you can pierce the corporate veil and someone could sue you and say you're really not maintaining a separate corporation, you're really basically commingling assets. So we recommend people have separate bank accounts, separate credit card for the entity. Also, keep really, really good books. What I mean by that is whether you're going to use QuickBooks or Xero or some other accounting software, make sure you keep accurate books, because what we also see is someone comes to us and says, hey, I just want you to complete our tax returns. We've already done our books. You don't need to do it. And then we look at it and it's got like some outrageous stuff on there. And I tell them, hey, I'm just going to go based on face value. What you give me, it's incorrect. But if you don't want us to fix it, that's how it's going to be. And you're going to get a nasty letter from the IRS and the state agencies.
And you also mentioned before about taking a reasonable salary. What if someone says, you know what, I just want to kind of build my company up and I don't want to take anything. I have enough assets, why is that done? And kind of what's the purpose of it? And if you don't do it, what happens?
So if you don't do it, the IRS, I mean, this is a big audit trigger. So the IRS is going to see that you have not taken a salary because it's one of the line items on the 1120S, which is a tax return for the SCorp. They're going to see that you're not taking a salary, and then it's going to trigger an audit, and they're going to ask you why you're not taking a salary. If you don't take it, then you're obviously avoiding the payroll tax, which is the reason why most people don't do it. Because as I mentioned earlier, with an S corporation, any net profit, you only pay income tax on. You don't pay payroll tax. Whereas with an LLC, you pay payroll tax on it. So those are the two differences. As far as how much of a reasonable salary to take, this is like huge gray area. I should have mentioned this earlier. We have a lot of physician clients. That's our concentration, although we have a lot of other types of clients as well. What we tell our clients who are physicians is do a analysis to see how much a physician, if you were to get hired by another group and with your level of expertise, this many years out of training, how much would you get hired for? And try to lean more towards on the lower end of the range. And then we take that amount, we document into your corporate minutes, and then we use that to determine what your reasonable salary is going to be.
Okay, yes. Attorneys have the same thing. I'm an SCorp myself, and I've always, I talked to my tax person and I said, what's reasonable? She says, I don't know what's reasonable, take some and just hope you don't get audited. And it's difficult sometimes because, some months I'll have great months and other months it'll be kind of lower. And if you're just taking a high salary, you just take everything out of the corporation. But if you take it too low and, you're just kind of thinking, well, is the IRS going to come after me because of payroll taxes, that I was supposed to pay and didn't pay because I was trying to trick them into taking a lower salary. So lots of different individuals have that same type of thing about how much of a salary is a appropriate one to take.
Just one more.
Go ahead.
One more comment related to that. This actually, obviously, it's an exception, but this actually came back and bit some people in the butt because for the PPP loans, which I'm sure you've heard about, it was to be able to qualify for the PPP loan, the Paycheck Protection Plan loan, you had to have a paycheck, a payroll. And for someone that earned a lot of money and they thought they were going to get a lot of PPP loans, but they only gave themselves a $20,000 salary or no salary, they didn't qualify for the PPP loan, even though they needed it or they wanted it. They didn't qualify because they did not pay themselves a salary or they didn't pay themselves enough of a salary.
Yeah, actually, that actually happened with me where, I wanted to keep things kind of low. And then when they said, how much did you make last year? I was like, oh man, I should have given myself more of a salary. But oh well,
You don't know that.
I can't complain. It was, free money.
Yeah.
But still, yeah, these things, you never know what the consequences are going to be down the line.
Right. So sorry, I didn't mean to cut you off when you're going to ask me the next question.
Oh, I was just going to talk about maybe just some other aspects. And, one of them was about another consideration, obtaining licenses and permits or kind of what you need to do also when setting up your business.
Yeah, that's a great comment. So when we set up entities for individuals, we always look to see where they're operating from. So if they're in the city of Los Angeles, for example, you have to get a city of LA a business license, and you have to do that. Otherwise, you're going to get a nasty letter from the city of LA, and they share information with the franchise tax board. So if you think you're going to fall under the radar, you're in for a rude awakening because the state of California is going to share your tax return with the city of LA, and they're going to say, "Oh, Adam, you had a Schedule C or you had an S corporation. How come you don't have a?" And they're going to look at your address and they say, "How come you don't have the city of LA business license?" So you want to make sure you get the city of LA business license or whatever city you're in to make sure that it's required. The city of LA, for example, has an exemption if your gross receipts is less than $100,000. You don't have to pay tax on it, but you still have to get that license and renew it every year. Some cities don't have a license requirement. So, for example, city of Glendale or Calabasas or some of the other cities don't have them. So make sure you check with the city. Also check with the county because the county has certain tax that you have to pay. So, for example, LA County has what's called it's unsecured property tax.
Okay.
Basically, they tax you on all the office supplies or all the things that you have in your office on an annual basis, which is the most ridiculous tax I've ever heard of, but nevertheless, it's a tax.
Okay. Good stuff to know there. I have to look into I try to pay all my taxes, but hopefully I'm not missing anything. I'll plead ignorance, but ignorance is no excuse for the law. So why don't we just talk about, just wrap it up here about, you're not even primarily for startups, but actually because of my background, I do have a fair number of, physicians and dentists. So the types of stuff that you do kind of outside just kind of giving advice on taxation, what do you do for companies and individuals as part of your firm?
Oh, it's a pretty broad range. I mean, for a lot of our companies or individuals, it depends on what's going on in their life. So later on today, I'm talking to a client who is thinking about buying a second piece of property. They own their primary home. They're thinking about buying another one. And we're trying to do some calculations to see if they're going to be able to keep their existing one, rent it out, and then buy another one, and just basically doing those numbers for them. So that's kind of one example that we're doing. Another one we're doing is getting one company ready for a sale in a few years. And when we know a company is going to be getting ready to be sold in a few years, we want to make sure that their financials are very, very clean. And not to say that financials are clean before, they're not clean before that, but a lot of business owners tend to put personal expenses on their business, which is totally fine. I think that's common for a lot of people. But when you're trying to get ready for a sale, you want to start maybe weeding out some of those personal expenses and not have them on there. So that way the ratios and the financial numbers look accurate when you're getting ready to sell them. So it's a variety of stuff that happens with the advice we give our clients.
Okay. And how should people find you if they want to contact you?
They can go to our website, which is acapam.com. So that's Apple Cat, Apple Peter, Apple Mary.com. They can email us. Hopefully you'll have our contact information on your podcast. It's info@acapam.com. Or they can call us 818-272-8511.
Okay, and you have your own YouTube channel that actually I was interviewed on last week. Want to tell people how to find that?
Yes. So if you go to YouTube and you type in ACAP Advisors, you'll get to our YouTube channel. It's ACAP Advisors and Accountants. And we do a variety of videos, including having subject matter experts on, like yourself, that talked about patents last week. So we'll do subject matter experts. And then we also do what we call an ACAP recap. And it's essentially a recap of commonly asked questions we get from clients and prospects that we feel other people may have the same questions, and we answer them to reach a broader audience.
All right. And any last minute thoughts before we sign off for the day?
I did want to circle back on just one item on the taxes, because this came up very recently, and I just want to have a reminder for your listeners. We had a client recently who was collecting sales tax and was not remitting them to the state. If you are collecting sales tax from customers, you have to remit that over to the state. That is not your money. So you got to make sure you do that. And the state, you have to do it on a monthly basis based on how much sales tax you're collecting.
So you're just charging tax and just keeping it. This is an extra, 9% for himself. All right.
So make sure you do that properly. It's not revenue. It's a liability.
All right. Sounds good. Well, thank you so much, Ara, for coming on. And, have a great weekend. We're doing this on a Friday, but who knows when you'll listen to this.
Thank you very much, Adam. It was a pleasure to be on.
All right. Take care.
Thanks for listening to the Patenting for Inventors podcast with host Adam Diamond. If you enjoyed the show, please rate and review on iTunes. The contents of this podcast are intended for general informational purposes only. The facts of every legal matter are unique, and the content of this podcast should not be construed as offering legal advice for your specific legal situation. For more information and help with your own intellectual property needs, contact Adam Diamond at patentingforinventors.com. That's patentingforinventors.com. Or call Diamond Patent Law at 424-281-0162. The preceding information may be considered an attorney advertisement and does not establish any attorney-client relationship.